Now joined by Thomas Meyer. He's Chief Economist and Head of Research at Deutsche Bank. Thank you so much for coming in, Thomas. You know, every day, I guess there's something new coming up, and every day the uncertainty seems bigger and bigger. We are not really talking about restructuring anymore, but now Angela Merkel also wants to see more proof to get extra help for Greece. Is it dangerous, delaying the restructuring, but also delaying a possible bailout?
Well, this is actually exactly the quandary in which we are in. I think we have a problem of timing. On the one hand, it takes time to bring an economy such as Greece, back to stability. You need to have a lot of supply-side reform. We just heard about the problems with privatization. We have problems in deregulation. The liberalization of the professions is not really moving forward. They've done a good job in cutting spending, but here what is really needed is supply-side reform to get growth going. For that, you really need time. But they don't have time, right? The markets want to have a fast action. The patience of the EU taxpayer is very, very limited. And we are seeing here these two timelines clashing. That, I think, is what the tension is all about.
But restructuring, it seems that now it's a little bit on the back of our minds because it would possibly be too dangerous. Do you think we need it? We were speaking to a CEO of actually Hellenic Postbank, and I was really trying to push him and saying, can you survive if there's a restructuring? And he wouldn't comment really on that. Sure. Do you think that it would be the end of the whole banking system?
No, I don't think so. I mean, I don't think that the Greek banking system is systemically important for the euro system. I mean, people have likened it to the Lehman event, right? But when Lehman happened, we had a very, very integrated bank. Lehman was extremely integrated into the global financial system. We spent the last 2 to 3 years, right, to disintermediating the Greek banks. The ECB stepped in and did the funding. So I don't think that the Greek banks are systemically important. Of course, for the country, it would be a big problem. But for the euro system as a whole, I don't think that this is a major key issue. It's a major issue, but it's not the key issue.
Do you think that they are actually thinking about going out of the euro? I know this has been since denied, but if you look at the yields, today they were at 26% for the 10-year Greek.
Yeah, no, going out of the euro is not an option at all, neither for the Greeks, nor is it something that the euro area would want to have, right? Because just think about it. If you get a 50% devaluation of the new drachma, the government would be bankrupt, the banks would be bankrupt. Without any help, you would not get financing for any economic activity. The economy would be in free fall. There would be young Greeks emigrating to the rest of Europe. It would be chaos, right? Yeah. So we can't have that. But I think where we're headed to eventually, I think we can see when we follow the evolution of the Latin American debt crisis of the 80s, right? When Mexico had a payment problem, we first got together and provided liquidity supports. That was to stabilize the situation. Next stage, 1985, came the Baker Plan. That was a plan supposed to bring these countries back to solvency by structural reforms, and in the meantime they were supposed to be funded by foreign creditors. Well, that did not work. In '89 we had then the Brady Plan, where we had an orderly debt restructuring. It seems to me we are pretty much seeing a similar line of events.
And of course, today we don't only have to deal with the debt crisis and what we're going to do with restructuring and negotiations of a bailout. We also have to deal with inflation. And today we saw Germany inflation much higher than estimated. How is that going to impact what the ECB is thinking, and how much more difficult does it make their job?
Well, clearly the ECB has to make sure that they are not being perceived as running their monetary policy for the weakest links of the Eurozone. That would undermine their standing in the entire euro area. It would undermine the political support for the euro. So they have to make sure that they are symmetrical. They're already running a very loose monetary policy, even so, they have been praised a lot for having raised rates by 25 basis points. But when you look at it from a German perspective, they're extremely loose. So they have to find a balance between
How do you balance this dilemma?
Well,
finding growth and at the same time keeping inflation under check? Yeah,
I think they try to do this by dissociating interest rate policy from their liquidity measures. That has gone for a while, worked for a while, but now we are seeing that with their liquidity measures, they're actually propping up problem banks. They're propping up governments that have serious solvency issues. So I don't think that they can sustain this dissociation between interest rate policy and what they call liquidity support. They will have to come around and focus on their core business, which really is aggregate inflation in the euro area.
And actually, not only the euro area, is inflation becoming a problem worldwide at the worst possible time?
Well, I think we are now living in a time where the emerging markets are now exporting inflation. You know, they basically exported deflation in the period up to the financial crisis. That has changed. The emerging markets are growing very fast. They have a super loose monetary policy that's driving up commodity prices, but only it's driving up wages there. It's driving the prices for the products they export. And when these products come to us, right, they're more expensive, and the commodities are more expensive. Now, our central banks could, in principle, stop that by raising rates and letting their currency appreciate. But they're too afraid that this will bring us back to the financial crisis. Yep. So we're stuck, basically, now with importing inflation from the emerging markets.
Yeah, it's a difficult conundrum for a lot of central banks. Thomas, thank you so much. Thomas Meyer there.